Bitcoin's price is tightening. The charts are coiling like a spring. And when that pressure releases, boom, we're not talking about a move, we're talking about ignition. In today's video, we're going to deep dive into Bitcoin's bullish flag pattern that's happening right now. We're also going to be covering like how would handle this if we were a hedge fund and how we would approach it with new clients. So stick around. This is going to be a great video. It's technical, it's clean, it's got a roadmap to the next leg up in the bull cycle. If you're ready to see what we see, make sure that you give us a like, make sure that you hit subscribe, and don't forget to follow us on X, where we talk about Bitcoin and altcoins all day, every day. All right, let's get into it. Let's start with the 4-hour chart, because we always like to start with a lower time frame before we go to a higher time frame, so we can explain the little minutia, what's happening right now. Okay. We were originally looking at yesterday was a bullish rectangular pattern. Now, I explained that to you. Hopefully you took your notes yesterday. If you haven't seen yesterday's video, go back and check out yesterday's video. It was jam-packed with great information, if I don't say so myself, from Professor Tom. Now, today I'm just Trader Tom, so I really won't go that deep into it. But right now, we were looking at yesterday a bullish rectangular pattern, which is now evolved into a textbook bullish flag or bullish pennant. Why? Because price action has started to tighten up within this cone. Okay, so we went from the original rectangle right now to now, since we have a downward sloping line and we're starting to see higher lows within that triangle here, basically megaphone, but some people call it a megaphone. We're looking for the breakout to occur and go higher. Okay, so what it means is momentum is still alive. The market's catching its breath, and when this pattern resolves, the expected move is a breakout to the upside. Now, the key levels to watch, because this is a 4-hour chart, okay? It's not a big chart, it's not a long-term chart. All right, the key levels to watch are your 88,000, like 6 up here, 88,006, 88,008, and of course that all important psychological resistance at 91,000 up there. Okay, so those are the points to watch out for once we get this breakout. So if you're a short-term trader, you're watching that break. You're watching a break probably around 87,000 for the ride up to around 90, 91,000. Okay, so what generally happens if price breaks above these zones with volume, we could see the fast ride towards 6 figures in the long term. Now, this is what I've been promising you in the beginning. I think this is really cool because I want to go over this. Okay, let's talk trade execution. So let's imagine that you're a hedge fund manager, okay, and you got new capital to deploy. So you got people coming to you saying, "Hey, I like your past record. You've done really well for other people. I want to give you some money, and I want you to get me involved." Now, it's really hard as a trader to add new capital to an already existing position because we all know there's an ebb and flow in the marketplace, right? So if we just go in and we buy or we get long because we believe that the marketplace is headed higher for whatever we're trading, doesn't matter. We could be trading widgets, doesn't make a difference. We think that ABC widgets going up and we get this new capital. All of a sudden we just go, okay, let's just go buy ABC widget, right? So we're going to add. Now, we may be long ABC widget at $1 for everybody else, but right now it's trading at $2.35. So shit. I mean, if we buy $2.35 for the new client and it drops down to $1.65, I mean, the other guys are still making money, but those new clients are not making money. So we have to talk about how we're going to deploy new capital. So everybody wants the best entry possible, right? Really, the most important thing in trading is not so much the entry, it's the exit. Okay, now I can get into that in another lesson, but really entry is not as important as where the heck you getting out. That's more important than entry. Okay, so stop losses are extremely important. Also, on trade execution, where you're getting in, you need to watch the marketplace to see if the marketplace actually agrees with you. But we treat, crypto crew trading community like that. We like to actually show how we would handle if we were like going to deploy this money for our clients. So here's our plan right now based on the 12-hour chart. Really, we understand that we are in a bullish pen right now. Okay, we understand that. All right. We also know that the marketplace could rally up to our 89. It could come out of this, go up to 89, 90,000. It could meet a huge amount of resistance and break us back down. Okay, we overall believe that Bitcoin is headed higher. Okay, absolutely, we believe it's headed higher. Do we believe that it could go down to, this level down here, 78, 79,000, also down to 76,000? Yeah, absolutely. So because of the chirality of markets, like we discussed in a previous video, just as you have a left hand and a right hand, they're mirror images, exact opposites. Same thing can happen with trade patterns. So chirality, equal yet opposite. All right. So what we would really perfectly want to do for client Joe that just came to us and said, "Hey, deploy some of my money," is we'd want to we want to hopefully, if the marketplace gives us the opportunity, we'd love to get him long in this area. It's a much better price than just getting him long on a breakout up here. Now, if price doesn't pull back, if ideally if it pulls back to the 78 to 75,000 zone, that's where the retail panic is and the smart money accumulates. Excuse me. If price does not pull back to this area, okay, we have to have another plan to get Joe's money involved. Okay, we can't just sit on the sidelines and watch the rally take off without Joe involved. Okay, because at the end of the month or whatever he's going to say, like, wait a second, it was trading at like 90,000 and you got me in at 106. Like, what the F was that about? I mean, what the heck? I mean, what kind of, that does not, suit really well with anyone, including the managers on the other side. So if price doesn't pull back and instead breaks above 90,000, this level right here, we're going to get him long. Now, we're not going to just buy the first breakout, okay? We're going to watch, oh, shoot, price action is breaking up. Let's get some in the red zone here if we can. All right, we move back up. We couldn't get past that previous high. Okay, we could dip a little bit lower. Let's get them back in here, and then let's get fully, like in other words, let's get back in here. Absolutely, maybe we'd break this up. We'd go 1/3 out in this area here, maybe 1/3 in here. Optimally, if we didn't do this, and we, again, this is if my grandma had a pair of nuts, I wouldn't be here. But if the marketplace actually came down here, we could get a third, and then bang, once we take off, we can get finally another third, or we could start adding to the position on the way up, and then looking for the ultimate breakout up top. So that's how we'd scale in on strength, buy the breakout, buy the dip after the breakout, and continue to build a position as the trend confirms the momentum is there. Always, always, always with stop losses, always risk defined. That's how we trade. That's exactly why I said that exit is more important than entry in trading. And we'll give some further lessons on that in the future. And let's get on to something that we want to talk about that we've been talking about for forever. Okay, we're talking about M2. All right. Ethereum, all the altcoins. Remember, BlackRock holds $2 billion in Ethereum. That's not retail buying, that's institutional confidence. Now, but here's the kicker. M2 money supply is surging. We haven't seen this kind of liquidity expansion since the 2020 lockdown era, okay? And that's going to be affecting the whole altcoin market. All right, it's going to be affecting it hasn't started. Ignition is actually happening right now. But let's just focus on this. We've been talking about it. M2 is up 3.5% since January. It hit 108.2 trillion mid-March. Liquidity, leads Bitcoin, but with a lag. All right, so we've been talking about that. We're going to probably see, history tells us Bitcoin responds in 8 to 10 weeks after M2 rises. That means the surge we're seeing right now could ignite Bitcoin by late May or early June. So stack the positions smartly. Don't chase pumps. Anticipate them. Get in the train before the train moves. And we're here to actually guide you with that. So, and we're going to be talking about that in a second. But anyway, let's talk about Bitcoin and, the financial fortress that it truly is. All right. And I want to make sure that you understand where we're coming from. Okay. This is what we believe. Now, you could believe in anything you want. You could believe in a one horned mermaid in an octopus's garden, but let's get real. Inflation is eating away at everybody's fiat money, where Bitcoin stays fixed at 21 million coins. Fiat currencies can be printed into oblivion. Okay? Bitcoin can't. Bitcoin can't. So owning one Bitcoin isn't just a flex, it's a financial fortress for you. Okay? It's a hedge against a broken monetary system. It's a seat at the table of the future. It's a once in a generation opportunity. So no matter what you do, I don't give it, like the commercial that you see on YouTube all the time where the girl's got the extra 17 cents. She says, put it into Bitcoin. Do it. In my opinion, this is my opinion, okay? You can't really get hurt if you put 17 cents in, but you understand what I'm saying? Is try to stack yourself. Try to diversify your money. The world is changing right in front of your eyes. All right, enough of that. Again, like I said, this is my own opinion. Do your own research, okay? In my opinion, it's like owning, internet, domains in the 1990s. You don't want to get left behind with it, but that's just it. So anyway, before we move on, all right, before we move on, I want you to come on over. And I've got to tell you about our Crypto Crew training community. Just click on this link here. You'll be taken to this page where you can sign up. It's completely free. We're dropping insane alpha and trading opportunities daily, from breakout setups to long-term gems. We got you covered. You want to follow us with a solid broker? Click the link right here for our preferred broker. Low fees, fast execution, and with our strategies, you got a good chance of making some good money. So join the crew, level up your trading, and let's stack those profits together. So in closing today, crew, we just want to say that we do have the bullish pennant. We gave you the overview of like how we would handle this if we had new money coming to us as a hedge fund manager. If you found this information valuable, make sure you hit the like and subscribe button so you never miss a play. Share our videos far and wide. Leave a comment. What price do you think Bitcoin hits first? 75K or 95K? And remember, always, always, always follow us on X and do your own research. These are our opinions. Okay, do your own research. Make sure you trade with your head, not over it. And as a short-term trader, enjoy the party, but dance near the door. Cheers.